Hello everyone, welcome to Rajeshwari's Commerce and Management Study Hub. I'm Rajeshwari here. Let us discuss today the statement of profit and loss account for the year. It is Schedule 3, Part 2. It is stated as the Part 2. Now we have understood in the previous class how we are preparing the balance sheet. Now we are preparing the profit and loss account also here. It will be treated as a statement. Earlier, how you are recording, you are preparing trading account first, then you are preparing the profit and loss account. All the direct expenses you used to treat in the trading account, then all the indirect expenses and indirect incomes you are recording in the profit and loss account. But now here also you are recording the profit and loss account, the previous year amount and the current year amount. So as we have already discussed, why we are recording both previous year and current year? To do the comparison. It is very easy to analyze to the stakeholders. That is why we will do previous year and current year data we are recording. Here, the first item which we are recording under the profit and loss account is revenue from operations. Revenue from operations. Whatever we are generating through sales, we'll call it as a revenue. So here we are recording net. Here also we have note numbers. Okay, so revenue from operations, that we are recording net sales we are recording. What do you mean by net sales? Net sales means after deducting the sales returns we are recording. Okay, then if any other incomes are there, then that also we are adding here. Other income, revenue and other income. Then the third item will be total revenue. Total revenue. How we are getting total revenue? By adding 1 and 2. 1 and 2. We will get total revenue. After this, the fourth item is we are recording all the expenses. All the expenses. Here, the expenses includes, the first item is cost of materials consumed. Cost of material consumed. That is nothing but your cost of goods sold. Okay, COGS. So here we are taking opening inventory plus net purchases minus closing stock. Okay, so that will be our cost of material consumed. And your purchase we are taking net purchase. Net purchase means after deducting the purchase returns we are recording. That is cost of material consumed. Okay, here we are recording total revenue, then cost of material consumed. The next item is changes in inventory. Changes in inventory. Under changes in inventory, we are taking the difference between the opening inventory and the closing inventory, that we are recording in the changes in inventory. Then employee benefits. Employee benefits. Employee benefits ಅಂದ್ರೆ ಏನೆಲ್ಲ ಬೆನಿಫಿಟ್ಸ್ ನಾವು ಆರ್ಗನೈಸೇಷನ್ ಇಂದ, ಕಂಪನಿಯಿಂದ ಎಂಪ್ಲಾಯೀಸ್ ಕೊಡ್ತಾ ಇದ್ದೀರಿ. ಒಂದು ವೇಜಸ್ ಇರ್ಬೋದು, ವೆಲ್ಫೇರ್ ಫಂಡ್ ಇರ್ಬೋದು, ಸ್ಯಾಲರಿ, ಆಲ್ ದ ಎಕ್ಸ್ಪೆನ್ಸಸ್ ಯು ಆರ್ ರೆಕಾರ್ಡಿಂಗ್ ಅಂಡರ್ ದಿ ಎಂಪ್ಲಾಯಿ ಬೆನಿಫಿಟ್ ಎಕ್ಸ್ಪೆನ್ಸಸ್. ಓಕೆ, ದೆನ್ finance cost. Finance cost. What do you mean by finance cost? Which are all the costs you are going to consider under this finance cost? The finance cost we are recording the interest, debenture interest or whatever the borrowed charges are there, no? So that will be recorded under the finance cost, borrowing charges. Okay, then depreciation and amortization. Why it is depreciation and amortization? Because here depreciation we are calculating on the tangible assets. Amortization we are calculating on the intangible assets. That is why amortization will calculate separately. Both the meanings are same. It reduces the value of the asset. But this depreciation will be calculated on the fixed assets, that is tangible assets. Amortization is on the intangible assets. Okay. Then other expenses. Other expenses. And one more point you need to consider while calculating the changes in inventory. Inventories, we have three different types of inventory. Inventories, when we start the work, we will get the raw materials. So that is also called as inventories. And work in progress, when the work under the progress process. Okay, then once it is getting ready, finished goods. Okay, all the three you need to take separately, you need to add it, then together you are showing under the changes in inventory. Then other expenses, all other expenses, whatever the expenses are arising in the business, that will be treated under the other expenses. From here we have note numbers. Here we are giving note number 1, 2, 3, 4, 5 and 6. Okay. Then after this we'll get total expenses. Total expenses. This will be our fifth item, total expenses. Now, to get the profit before extraordinary items and tax. How we will get this amount? By taking third amount. From third amount, we are deducting the total fifth one. Total revenue minus total expenses. We'll get profit before extraordinary items and taxes. If we have any extraordinary items, then we are considering that also. Extraordinary items. So extraordinary items we are considering. After deducting, we will get profit before tax. Profit before tax. So we will get this profit before tax. Sixth amount, that is profit before extraordinary items and taxes. We are deducting the extraordinary items. Okay. Then we will get profit before tax. Now tax. Less tax. Tax we are minusing. Once we minus tax, we will get profit for the year. Profit for the year. That is, from profit before tax, the 8th item, you are minusing the tax. 9th item. You will get profit after the tax. That is profit for the year. Then we are calculating the EPS. From this EPS, it is earnings per share. By taking profit for the year divided by number of shares, we will get EPS, earnings per share. This is the format of the profit and loss account as per the Companies Act 2013, Schedule 3 and Part 2. Now let us understand with this one simple question. Okay. Now take a screenshot of the question to practice later. The question is, from the following trial balance, prepare a statement of profit and loss account for the year ending 31st March 2023 as per the Schedule 3 of the Companies Act 2013. We know what is trial balance is. Trial balance is the balance of the ledger accounts. At the year end, whatever we have balanced in the ledger account, that will be recorded in the or posted to the trial balance, right? So your sales, salary, wages, stock, that is 1422 means opening stock, purchases. Bank OD is given 12% debentures. It are issued on 1/4/2022. Plant and machinery, depreciation on plant and machinery, equity share capital, the shares of rupees 10 each, 7% preference share capital, that is 1 lakh, land 6,74,000. So total is 16 lakh. Right. So sales we are recording under the revenue from operations. Any sales return is there? No. No other adjustment. Salary and wages both are coming under the employee benefits. Stock, opening stock and closing stock. The difference we are taking. Okay. So purchases and cost of material consumed, for that we need to take it opening stock plus purchases minus closing stock. Right. Bank OD is given 12% debentures. So interest on debentures we are taking. Plant and machinery, again this will only the depreciation here we are calculating. Depreciation is given. So this will go to the under the tangible assets, equity share capital and 7% preference share capital. Land value is given. Again for land also rate of depreciation is not given. If it is given, we need to calculate it. First, let us prepare the notes on account, because only 3 notes we need to prepare for this question, right? So the first one is for employee benefits. Note 1 is for employee benefit. Employee benefits is or what? Salary and wages. Salary is how much? It is 90,000. Wages is 1,10,000. So total 2 lakh is employee benefits. After this we have that is finance cost, debenture interest. Finance cost. Finance cost we are calculating interest on debentures. Interest on debentures. How we are calculating interest on debentures? It is 12% debentures. The rate of interest is always given with the name. So this percentage represents the interest rate. Interest on 1 lakh 12%. 1 lakh into 12% means 12,000. 12,000 is rate of interest. Then depreciation. So depreciation and amortization is there. So depreciation and amortization, it is only on plant and machinery. Plant and machinery, it is 16,000. No other adjustments. And changes in inventory, you have to take it whether it is given it or not. You have to compare opening with the closing. Here closing is nil, so only opening. So increase we are considering. Okay, now let us write. What is the revenue from operations? That is net sale 10 lakh. Salary, any other income? No, it is nil. So total income is 10 lakh only. Next, salary and wages, that will come under employee benefits. We have recorded on the notes on account. It is 2 lakh. 2 lakh. Material consumed, purchases. Purchases is 4 lakh. And changes in inventory, only opening stock is there. So opening 1,50,000 minus nil. Closing stock is same 1,50,000 we are recording. Finance cost, it is, we have already calculated, that is 12,000. Depreciation and amortization also we have recorded, that is 16,000. Other expenses, it is nil. Right. So total expenses is 8, 7 lakh 78 right? Now, any extraordinary items? No, it is nil, right? Then extraordinary profit before extraordinary items, that is expenses minus total expenses. So what is our profit before extraordinary items? 10 lakh minus 7,78,000, 2,22,000. It is 2,22,000. Okay, extraordinary items are nil. Now profit before taxes 2,22,000. We'll assume tax year as 30%. 30% on 2,22,000 into 30% is 66,600. Right? So minus 2,22,000, 1,55,400 is the profit for the year. Okay. Now EPS is, your profit is 1,55,400. Then your equity is 2 lakh divided by 10 each, 20,000. What is the value per share? EPS, earnings per share. 1 lakh, 1,55,400 divided by 20,000. 7.77. I hope you all understood, right? Thank you for watching. Have a great day and practice. Only practice makes you perfect. Don't by heart, understand. So here what we have done, the COGS completely we have showed separately. The purchases we have showed, then the closing minus opening minus closing stock, that also we have shown over here, right? So understand this. Thank you for watching. Have a great day.